How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update for US dollar versus Japanese yen. It's currently now 5:46 p.m. here in New York, Wednesday. It's still Wednesday, even though you can see the Thursday candle. It just opened not too long ago. See, it's 23 hours and 13 minutes till it finishes closing. But we can see Wednesday takes out the previous daily high on Tuesday, gives a high probability sell scenario here. And we'll talk about that a little later in the video on the weekly chart broken down on the 1 hour. We could see that price is still coming lower. And I don't want to see that happening here. I want to see price go up. I want to see this higher swing low gather us to go higher. Now, this could just be a counter trend candle. And the next day could also be another down close candle. But I'm really speculating that price should be going higher. If there's any sign that price is not going to go higher, then I would abandon ship, reevaluate my thoughts, re-speculate the market, and go neutral, and then potentially see if I'm bullish or bearish once again. Now, that doesn't mean that I'm going to instantly jump ship and go sell. No, I want to methodically make sure I'm getting in at the best price possible, and I'm not going to be holding a lot of drawdown when I get into that sell position if the market is going to go lower. You can see the inverse is happening for the yen. Got an up close day instead. So instead of breaking down after getting this lower swing high that we expected, after breaking these swing lows, we got a lower swing high compared to this one. We got an up close day. And I'd rather see previous daily lows being broken. This could just be a counter trend day. So price is just trading up just to get traders out of their shorts and get them back in long. While the next day or the next following day, they drop it back down lower, taking out this swing low. That's potentially what could occur. But I'm not saying that's going to be 100% accurate. That is one scenario that can occur. Or instead, price comes up, takes out this swing high, and the trend starts all over. Price takes out this swing high, then we get a higher swing low, and it keeps going up, taking out the 20-day high, 40-day high, and 60-day high. So yen would come back strong. We can see the dollar hasn't really been doing much, honestly. It's just to talk on the dollar. So going through April, you can see here, consolidation. Going into May as well, consolidating. We've been consolidating inside this last bullish order block that we can see here, the most obvious one, before this up move all the way up and then back down. The largest body, down close. We've been trading in that for a while now. It's been ranging. May's been moving sideways as of right now. But I rather see price continue to go higher depending on the macros and the seasonality. That's why I said seasonal charts do not always tell you whether or not the chart's going to go up or down. The price action is the most important part. It needs to align with the seasonal chart. Sometimes it doesn't align and you don't get the seasonal chart bullish May or the seasonal chart bearish May. This swing low formation, 1, 2, 3. If this swing low formation is broken, or either this one here, 1, 2, 3. There's one here, and there's one here. And there's even one here as well. If that's broken, that could be a sign that the market makers have already sold up here above May's opening price and a premium, and they're now making lower swing highs to go lower. And then it will take out the 20-day low. And dollar is slowly still just going down. So that's something to look out for. If we were to look at inversely correlated pairs to like UJ, so if you look at British pound, we see the foreign currencies themselves still going higher. As you can see, I marked off a swing high that was recently broken in price. And then we can see a higher swing low formation formed here. 1, 2, 3. This swing low is higher than this one here. That's a sign that you're in a bullish trend. That's my most basic way of finding whether or not the market's going to go higher or lower. And if not, I'm caught in a false break. It's either one or two. You caught the trend or you're in a false break. That's how I normally see it. If you look at AU, same thing here. You can see AU running all these swing highs. Now, this could just be me, AU, running up these highs just to come lower, to take out that. That's a scenario. Or it's just going to keep going higher and look for any other old swing highs on the left side of the chart. That's another scenario as well. Now, if you also look at gold just recently too versus the dollar, we can see price is still going higher as well. So it just recently broke a swing high. So let's say this one. Let's say this one as well. Oops, I'm sorry. We got this swing high here that was broken. We have another swing high that was broken here. So multiple swing highs has been broken. You see price trades back down into this small fair value gap and creates a higher swing low formation here. 1, 2, 3. That's a higher swing low formation. If we're getting a higher swing low formation, that means price is most likely going to be targeting a swing high formation, which is this one here. So gold still on a very bullish super cycle going into the year. It's still heavily bullish compared to the DXY. It looks completely inverse to the DXY, honestly. And it is. You see dollar going down, and you can see gold is going up. So this year, gold has been outperforming a lot of the risk assets right now currently. And the greenback right now is just suffering. It's just going lower and lower and lower. So that's all I'm really speculating. From a weekly perspective, we can see same thing that I've been talking about as well. Look at that high probability sell scenario. So this is just a little bonus at the end, because I know some people want me to get into intraday, and I feel like it's tedious to go through some of that stuff when you have simple concepts and ideas to find setups now. It's very obvious and apparent, and you guys are going to see that in the New York session model video I post later this week. Price comes up, takes out the previous daily high right here. What's above that high? That's buy side liquidity. Doesn't take a rocket scientist to see that. It's buy side liquidity. Price takes it out and then runs lower. When it takes out this high, where is it physically? It's above the weekly opening price, so it's in a premium for the week. It's overbought. For the day intraday for Wednesday, it's also overbought. It's above 12 a.m. true day opening price. The algorithmic opening price, 12 a.m., it's above it. If you go down on a lower time frame as well, so let's say we go down to 15-minute time frame, we could see the sessions as well. Look at London, 2 a.m. opening price. So if we were to draw out 2 a.m. briefly, which is right here, we'll make it a straight line, and we'll make it dotted, and we'll make it black. That's 2 a.m. opening price. Look how price moves above it. Isn't that coincidental? Same thing here. Look at this is 7 a.m. opening price. Look at how these opening prices themselves are above 12 a.m. and the weekly opening. And there's a sell scenario above the opening price. That is not random, my friends. Not at all. My fellow traders, this is what you call an ideal sell scenario. And also, you can see that classic ICT setup. Accumulation, manipulation, distribution. They're accumulating the orders, the buy side and sell side sentiment in Asian. Then the breakout traders are saying, oh, it breaks the Asian session high. We're going to probably see a breakout, retest, go higher. Above the Asian session high here. When we have the Asian session low all the way down here. But instead, price tricks them. Boop. And instead, it goes lower. Price comes down. Auto trade entry from this high to this low. Some type of auto trade entry going to New York. Look at that quick sell-off. Very quick sell-off. And that's all because price is lining up with all the ideas of being in an overbought condition. That's what's going on here. Overbought condition. The session is overbought. Price is moving into overbought session. Overbought. Overbought for the day. Overbought for the week. Ideal sell scenario. But it all starts with the basis of we took out the previous daily high. Commercials are most likely, I want you guys to write this down. The commercials are always most likely getting their ideal sell scenario after breaking a high. Now, if we look at this from another perspective, inversely, so since we're looking at UJ and we're looking at yen, so look at this is the yen futures. So if we look at the yen futures, the same thing is occurring. Nothing has changed there. Look how price takes out the previous daily low. Sell side liquidity. Doesn't take a rocket scientist to see that. We're in a discount for the week. We're below the algorithmic opening true day discount. And we're below the sessions opening price as well. So if we go down to the 15-minute time frame, let's just find 2 a.m. briefly. So this is 2 a.m. here. That's the opening price. I don't have to get it perfect, but that's the opening price there. Look how price drops below it during London. Same thing here. Let's go to 7 a.m. opening price. We're 7 a.m. right here. Look at how price is dropping below 7 a.m. And look at the opening price. It's also printing below 12 a.m. Isn't that coincidental? That the opening price for the sessions are one below the intraday 12 a.m. midnight opening price discount and the weekly opening price discount. And that's all happening after price is taking out yesterday's low, Tuesday's low. Boom, runs higher. With speed too. Now, if we look at the DXY, this is a little different. So looking at the DXY, we can see, let's go back on the hourly. I have this marked off on the hourly. We're in a premium. And you can see how price fails to take out Tuesday's high. So we get a failed swing, creates a lower swing high formation. Price breaks down quickly. Now you may not have caught this because many people may say, I want to catch this opportunity here. That may not be what you want to catch. Unless you found a reason to go short here, then you would have caught this. Most people aren't going to catch that move. That 1 hour sell-off, most people wouldn't have caught that. But if you look at it from a higher time frame perspective on the hourly, you can see this is a high. This is a high. There's the middle point here. And we're using all these down close candles, just the body, not the wicks. You have your mitigation. Price trades down, trades back into it. So we got a high point here, high point here, and then we have a low point here, right? Boom, 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 boom. All in confluence with what? You also have the fair value gap with the market structure shift here. So there's a fair value gap from here to here. That is a market shift. So speed is running through that swing low. And you can see how it quickly, and say this time and time again, quickly it runs to the weekly opening price, guys. And what happens as soon as it gets here? Look at how the reaction is very quick here. London close gives an intraday reversal. So there's probably a small buy scalp opportunity, 10, 20 pips. If this was like another pair, 10, 20 pips of a scalp opportunity going up from being in a discount. But if you look at all the sessions as well, so if we go on the 15-minute time frame, and we got rid of all these, and this, and we just look at the sessions. Look at the opening price. Where is it forming? Let's get rid of that. Where's the opening price for each session forming? Above midnight opening price. This is 2 a.m. opening price here. This is 7 a.m. opening price here. Notice how they're both, the opening price themselves are physically above midnight, 12 a.m. right here. 00 right there. And Sunday's opening price here. And it fails to take out the high. Isn't that coincidental? So hopefully this was insightful. All in all, dollar is still moving sideways. So we're in unmarked territories, but we can see that foreign currencies, gold, they're all going higher. So people are probably still speculating dollar to get weaker. And we're just going to follow the price action throughout the rest of May. There's nothing we can do but follow the price action. I'm not sitting here trying to predict how often the market's going to turn up and down. I'm just trying to predict whether or not the market is going to be bullish or bearish for the month. And how can I potentially utilize that to find opportunities for myself. So, peace.